Well, I've said if we can go all the way through the end of 2022 and not see this crash start, then I would say yes. I don't have much to say about the economy anymore. It's still a bubble, still got to blow, but then I have no idea if it can last that long. I say the odds are 90% it does not make it that long without this first crash setting in.
Let's talk more bad news before there is good news coming from Harry Dent. So stay tuned, folks. Hold on. Hold on. We'll get there. But first, cryptos. You actually think cryptos, should we have the stock market crash, will get hit even harder than the stocks?
Yes. And let me tell you something. That's a good sign. You know what I'm parroting the cryptos on today? On the .coms. Amazon came at the end of that bubble. That wasn't the bubble, the Amazon, the .com bubble. It was it was a broad internet and tech bubble. The .coms came in the last few years and started to roar, just like the cryptos here, the end of this bubble, and then burst. Amazon went down 95% and the internet index went down 96%. I call it the baby bubble. New sectors emerge. The smart people say, oh, this is the next big thing. And I am on that train. I am crypto. I call it PCs, internet, crypto. The three big stages of technology. This is the next big thing, but I've studied these big things. They have a baby bubble, the most extreme crash. Then they have the daddy bubble, okay, that lasts much longer. So I'm saying crypto will crash more than the stock market, 95, 96%, something like that. Stock market, 87%. And guess what will be the best buy out of this? I'm not going to buy AT&T or IBM. I'm going to buy freaking Bitcoin and Ethereum and Cardano, whoever, Solana, whoever survives this thing. There's 9,000 coins. Some people say there's 14,000. This is crazy.
Oh,
this is typical of a baby bubble.
You would step in and buy.
Oh, I'd say it'd be the buy of a lifetime, not just to buy this next crash, which will be the largest in our lifetime, if I'm right, but to particularly buy the crypto sector, because it is the leading edge, better than biotech, better than other sectors, and that's all part of it too. In nanotech, buy the crypto sector will be the best buy.
Because it would come back roaring in how long should a crash happen on the cryptos?
Yes. Okay. So they'll probably be the first to bottom, maybe, 2021, 22, instead late 22 instead of 23 for most stocks. And I say the next boom will come from 2024 to 2036, 37. And that's right about parallel to a 20-year lag. The cryptos may go a little longer than that, but I call the crypto movement a 20-year lag on the internet. And the internet did the same thing. Remember, baby bubble crashed 96%. And then internet went up 600 times 600 times in 12 years. That's what I'm talking about. So that's bullish. You couldn't get more bullish than that.
Help me understand this from an economist point of view. Okay, really help me here. Because I've heard this narrative before, the comparisons to .com, but they're not built the same way. So why is there this conviction that the cryptos will have the same historical patterns as the .com?
Okay. What the internet did in the .com, it allowed retail, it allowed information to become mass, accessible, and it allowed retail to expand online. Okay. What crypto does, what the next boom is crypto is the digitization. Here's the best definition in one sentence: the digitization of all financial assets and money. That's what this revolution. So the reason that it's the next big thing, if it was just internet too, it wouldn't be another big thing. It is going to do what internet did for everything else, for the whole financial assets and money and wealth sector. So that's what's different about it. You got to be different to be the next big thing, but you have to build on the last big thing. So that's why I've been sold on crypto from the beginning. Once I heard a guy spoke at one of our conferences, Mark Yusko, and he gave that definition, and then I got it.
Yeah, I like Mark.
That's a big deal.
Yeah, I didn't think you'd buy or ever buy into crypto, so I'm interested to hear that.
Oh, absolutely. I'm saying that is the number one sector. I'm going to be saying whatever survives, and you have to look at what survives in a shakeout. Okay. General Motors basically came out of that shakeout and kicked Ford's ass, who came in leading. So something else but you see who shakes out and does the best and holds up the best and starts to lead. The crypto sector should be the number one high return sector to invest in coming out of this. And guess what? That's the opposite of what you'd expect, that it crashes the hardest. You buy whatever crashes the hardest that still has the fundamentals. Because again, I'm putting it on a 20-year lag to the internet stock. So if you'd have bought Amazon, I'm saying buying crypto in 2023 would be like buying Amazon for $6 a share in late 2021 in the last crash, after going down 95%. That's what I'm saying. It's that clear.
Someone on that's also bearish on Bitcoin on last week. And I think it's, interesting if we listen to you guys, for those who have Bitcoin holdings or Ethereum, whatever, they're probably looking or listening to this now thinking, what do I do here? Do I get out now and then come back in? But
absolutely. Okay. If something, stock markets and financial assets, 20% corrections happen all the time in bull markets. Occasionally a quick 50% if you have a COVID or something. This is not that. You do not sit through a 96% correction, okay? If you do, if you're listening to me, if you see what I see, you wouldn't even think of sitting this out. You do get out now. And I thought Bitcoin would have one more run to 100 grand at the end of this year. Very clear 4-year cycle, by the way, in crypto, 2013, 17, and 21. We're at the end of the year. I say Bitcoin now peaked at 68,000. It's still holding up pretty good. I would be getting out of Bitcoin and looking to buy. My target for Bitcoin, and some things may be better, 4,000 to 7,000. You see that type of number a couple years from now, that's when you buy back. Don't lose 90% of your profits. Take them. All you got to do is get out about 6 months to see if I'm right. And if I am, you're going to be very, very glad you sold out, and you're going to buy so cheap, you're going to kiss the ground.
Let me ask you this. Let's get to some good news. Some good news. You say by 2024, we should be out of this. So this is the opportunity you speak of, Bitcoin, by the really diluted sectors here. So we come out of this. There is a pot of gold at the end of the rainbow for you?
Well, yeah. I mean, what did I say? I mean, Amazon went, the internet stocks went up 600 times after they bottomed in the last crash. So in those sectors, it's a lot. But I mean, just the stock market. Now, the thing is, this is something I've been saying back for decades. After this baby boom peaks and the millennials come along, the millennials have a shorter boom, and it only takes us back to where we were at the peak of the baby boom in the demographic sector, which is the most fundamental thing. So this is not going to go, I think stocks would be doing, the best I see is that stocks go back to these recent highs by 2037. But if you buy them when they're down at 5,000 and it goes back to 30 or 40,000, then that's incredible. That's an incredible return. But it won't be as strong a boom as the 80s and 90s was, because this generation's not as big. Now, where you will get that is if you go to Southeast Asia and India. China led this last boom in Asia, Southeast Asia and India, because China's already peaked in their demographics. Those, if you want to get astounding returns, crypto, Southeast Asia, and India, those are the 3 sectors to be in.
Let's wrap with this. I need to ask you about, you mentioned gold briefly before. Why will gold not weather the storm for you, Harry?
Okay, gold correlates with inflation, okay? Gold had its best boom ever in the late 60s and 70s, and then crashed big time after that, okay? Now it came back in this recent period because we've never seen money printing like it. Gold likes to see money printing because gold thinks money printing equals inflation. Well, we're getting a little inflation at the end of this boom here, but we haven't gotten that effect. What money printing did was inflate financial assets. And guess what's in financial assets? Gold. Gold had a bubble just as big as the stock market. It just peaked in 2011 instead of 2007 or now. Okay, so gold typically will do well. If I'm right, we start to see weakness, they're going to say, the economy's weak again, they're going to print more money. But when things go down, like in 2008, gold went up in the early stages of the 2008 crash and then went down 50% in the second half of 2008 when it hit bad. So gold is not the safe haven because we're going into a deflationary couple of years, not inflation. And that's when gold does not be the safe haven. So gold is not the place to be, but I tell you, if you have a little in your portfolio diversified, gold will hold up better than most commodities because of that at least that image that it's somehow a safe haven.
We have so many different viewpoints on this show. That's why I love it. Okay, bring it home for us, Harry. For all the folks watching, like I said, it's an Outlook 2022. You've made your case for 2022.
To get more specific,
Yeah.
I see 2022 from the highest point in the stock market early on, if not already peaking here in late December. From the highest point to the lowest point will be the worst single year for the stock market in all of history. Now that the crash will not be quite as bad as 89, but that next year, since we've held this back so long and bubbled it up and pushed it so far, when it finally breaks, I think 2022 will be the worst single